A lot to be worked through when it comes to the crypto push here in the infrastructure bill. A dramatic close to the push there. Bipartisan support around the crypto amendment that was sought to be included in that bill yesterday failed to get past the unanimous consent hurdle there in the Senate after Alabama Senator Richard Shelby objected to get his $50 billion defense spending amendment also included, weirdly, to that crypto amendment, to which Vermont Senator Bernie Sanders objected. And then it all fell apart from there. An impassioned Senator Pat Toomey, who led the charge in reaching a compromise amendment to clarify which crypto companies would have to comply with the improved tax push here, expressed his dismay on the Senate floor that the infrastructure bill would be moving forward without resolving that problem, which he says will kneecap the crypto industry. Take a listen.
We're going to ask these people to provide information that they don't have and they can't get. In what universe does that make any sense at all? All I want to do is have a vote on an amendment that fixes this in a way that has bipartisan agreement, in a way that constrains this to apply narrowly to the people who actually are the intermediaries running a centralized exchange who have this information.
That amendment, of course, won support from not just the Treasury, but also from the White House. So interesting to see where things go from here as the infrastructure bill moves forward. And for more on that, I want to bring on Jeremy Allaire, the co-founder and CEO of crypto company Circle, which, of course, is the company behind the $28 billion stablecoin USDC. And Jeremy, appreciate you coming on here to chat about this because it was kind of a complicated back and forth. It took a week or so to get both sides around the amendment on the same page. Then you had the White House and the Treasury. I mean, now that this doesn't go through, how is it going to impact the crypto sector and what you guys are working on?
Thanks, Zach, for having me on and happy to talk about the issues. I mean, I think you got to break it down into a few key pieces. I think first and foremost, the original amendment was put forward by Senator Portman, and Senator Portman made very clear as these revisions and bipartisan consensus was going back and forth that the intention of this was very clearly to be focused on exactly as Senator Toomey was saying, on those operators who have this trading information, brokerage style firms that are involved in supporting end users and institutions who are trading and having 1099s filed, similar to a brokerage account you have with Ameritrade or say some other service. So I think the intention is clear. What's remarkable about what unfolded is in a very, very fast period of time, the period of about a week or even shorter, there was an incredible amount of effort from many, many stakeholders, not just in the crypto industry, but broadly on Capitol Hill to really understand the issue here and, not picking winners and losers in certain technology, understanding more clearly the difference between an open source software developer, or even just a software and hardware creator and a financial intermediary. And that ultimately landed with, as you said, Treasury, White House, and bipartisan Senate consensus. And really through, what I think is just an unfortunate component of how these bills, these omnibus kind of bills get through procedurally, you had this sort of blocking right that existed around unanimous consent. So where does this go? I think what's important is that the Treasury, the White House, Capitol Hill, bipartisan support understand what's at stake here and are in agreement about it. And so I have some hope that as this gets to the House, that this issue can be raised there and an amendment can come in before this is ultimately passed into law.
What shape do you think that amendment should take? I mean, it sounds like this is going to pass the Senate, but to your point, it doesn't become law without the House. And so as you if you're looking to appeal to lawmakers, what do you think needs to be fleshed out more in this debate?
Well, what's interesting is that I actually don't think that there's a debate anymore. You had Senator Shelby, who's interested in his defense appropriations, exercising a blocking right, and another Senator Sanders, who's objecting to this incremental defense expenditures. It has nothing to do with crypto, of course. The bipartisan consensus that emerged and the definitions, I think, are relatively sound. And so if those are picked up, and attached to what is ultimately passed by the House, then I think we've made significant progress.
Yeah, and Jeremy, I mean, I guess, that's kind of what happens when you come with the unanimous consent push. That's generally those are the risks, right? And some people might say that, you could have been here ahead of it, but there was kind of a last minute inclusion in the infrastructure bill. When you talk about other things, though, and just kind of regulation writ large, you guys made some news there by, opening the push to become a fully chartered national commercial crypto bank. We've seen other entities pursue that route, too. I mean, when you look at maybe where the regulatory pressure is right now, why do you want to go that route? And what does it look like maybe in the potential hurdles to get there?
Well, I think it's a great question. What we've seen happen over the past number of years, and in particular, really since early 2020, is this dramatic growth in the adoption of cryptocurrencies, crypto infrastructure, digital currencies more broadly. This has become a major topic. And dollar digital currencies like USDC, which we're the principal operator behind, have grown, at a very, very fast pace, as you noted, now at 28 billion in circulation. That's up from 400 million at the start of last year. And so as this takes place, it's becoming very clear that this is going to be an important part of the banking and payment system. And I think at a global level and now at a national level, the government understands that this is going to potentially touch everyone in the country and actually play a role in how the dollar transacts on the internet around the world. And so with that backdrop, it's actually vital that the United States has a national framework to supervise these large scale technologies. I think it's appropriate. And our view is that as we get to this larger scale, we want to be operating under the supervisory framework of the Federal Reserve, the U.S. Treasury Department, the FDIC, and really set a very, very high bar for safety and soundness and risk management in operating global scale digital currencies like USDC.
Yeah, Jeremy, just real quick too on how you compare to Tether. Obviously, it's a sliding scale of risks. You guys have your attestations; they have theirs. What do you think sets you apart from them? Kind of looking through the holdings, it looks like you guys are generally kind of similarly split among cash equivalents, and the like. What do you see as the difference there, and the sliding scale between why you wouldn't just be fully in cash and why you have some other assets backing it?
I think the really critical piece here, and I don't focus on any one project or competitor. USDC was designed with the ultimate goal of being a general purpose protocol for dollars on the internet and enabling broad-based payment transactions, everything from buying a cup of coffee or making a micropayment for a piece of digital intellectual property to being used as collateral in the issuing of some form of bond on the internet. So it has very, very broad designs. And that's why we see companies like Visa and MasterCard and others supporting it as a standard. This is not just about crypto trading on offshore exchanges. This is about building an infrastructure for payments, commerce, and financial applications on the internet. And from day one, doing that in a regulated environment. And I think that's been really key. This is operated under state banking supervisory regimes, under money transmission law. That's a very high bar on many fronts, on consumer protection, on anti-money laundering management. And so operating it in the United States in the regulated US banking system has really been a key differentiator and the reason why USDC has taken so much market share over the past 18 months.
Circle co-founder and CEO Jeremy Allaire, it's good to talk to you today. I hope to have you back on the show again soon.